Hi guys, welcome to today's trade of the day. And for today's trade of the day, we will be looking at the Aussie dollar. Now, this week we have major Aussie news coming out and also major US news coming out. So that is why it will be good to look at the Aussie dollar to see how we can best play this pair using the volatility brought on by the news. So I want to start off with the daily chart because the daily chart, there is a very nice configuration, right? And what I see over here is that price made a strong push down and then another strong push up, almost like a V-shaped recovery. But at the end of this push, there was what seems like a double top pattern. Now, in every double top and double bottom pattern, it has to be preceded with a strong trend, right? So a double top pattern like this, there should be a strong upwards trend. In a double bottom pattern, there should be a strong downwards trend before we see the double bottom pattern. Okay, so with that, let's look at the daily. Of course, the daily, what we want to look for is the resistance and support levels. And graphically speaking, we have a horizontal resistance level here on the daily. Right, so we can call this the daily resistance. Okay, and as for the support, well, the support, let's just use Fibonacci because price made a low here and it made a high here, so we can take a retracement like that. And next we see the movement, the internal movement. Price made a push up before a small pullback and then another nearly straight push up. So the second retracement we can take from here to the high as well. All right, so that's the two retracements we will take. So let's do the first one. Open all Fibonacci ratios. And we see that the graphical level, the graphical overlap here falls very nice in place with the 38.2 retracement, right? Of course, 23.6 is not broken yet. However, the price action here does not look very nice. It's only the 38.2 that looks pretty nice and in line, okay? So let's select the 38.2. So now we're at the 38.2. Let's take the second retracement from the low to the high here and open up all Fibonacci ratios. And we see that the 38.2, the first fib that we took, the 38.2, falls very close to the 61.8, which is a key Fibonacci ratio level. And if I were to zoom in the daily, there's actually a candle that was rejected right below the 61.8. So let's just remember that this could very well be a daily support zone. Right, so let me just put it in there. Okay. All right, and then let's put the line for the daily support. Now that we have the daily support and the daily resistance, let's go down to the 4 hours. Now on the 4 hours, it's interesting to note that graphically, there is a support level here, right? We can call this the 4-hour support. And why I say that there's a support level here is because, firstly, the double top pattern here, this is the neckline. That's the first thing, right? Secondly, this level was tested once, twice, and price seems to be approaching this level a third time. Okay, so we can use this as a 4-hour support. Now, where is the resistance? Right, the resistance is a bit tricky because price made a high here, it made a lower low, and then it made a lower high, and then it made another lower low, and it made another lower high. Now, because when we see lower, when we see lower highs and lower lows, we immediately know that price is in a downtrend, right? So what we can expect from here is for price to make a push down towards the 4-hour support. All right, and there are two scenarios here. One is for price to come down. The first scenario is for price to come down to the 4-hour support before making a bounce up to the daily resistance. The second scenario is for price to come down to the 4-hour support, break below the 4-hour support, retest, and go all the way down to the daily support. So there are two scenarios here, right? And let's just connect all the highs to draw that trend line. Okay, and for this, let's go down to the 1 hour. Okay, so we just want to focus on these recent areas here. Okay, let me just tidy this up. So we have the daily support and the levels on how we get the daily support. All right, so now the 4 hour support is here. Question is, where is the best price to enter to play a trade? Of course, what we like to see is to either play the huge swing move up to the daily resistance or that sweet drop down to the daily support. But because now price is here and is holding below the descending trend line, we can look for a nice entry around this level and play and take advantage of this shot down here, right? So that could be one way of looking at it. And let's just try to find the nicest entry that we have on the 1 hour. So we see the price has made sort of a zigzag pattern, right? So we want to see how far price can go up. We can use an extension for that. We're using Fibonacci extension, first point, the second point, to the third point. We see that the 100% is up there. Let's see whether there are any other key levels, such as 61.8, all right, or even the 78.6. Now, why I'm looking at a 78.6 is because I'm actually expecting price, sorry, let me just put it there. I'm actually expecting price to make a push up towards this area here, where price meets the trend line and the Fibonacci ratio, right? Of course, if you are a bit more risk loving and you like to enter quicker, of course, we can have an entry at the 61.8 level. Now, this is an extension. We realize that price also made a push, a short-term push down. We want to see how far price can retrace backwards. So let's use Fibonacci retracement of the recent swing high to the low and open all Fibonacci ratios. All right, just zoom in to this area. And once again, we see the 61.8 retracement falls right on where price is, okay? And of course, the negative 27 target is quite close to the 4 hour support. And the 78.6 levels, if I were to put a 78.6 retracement, it is also in line with the trend line. So we have two entries here, all right? So let me just highlight that. Okay, we have two entries, and let me draw the zone. Okay, and this is how I would actually play it, right? I will have two entries to show you guys. This will be a sell entry for the high risk people, high risk traders, right? And then of course we have another sell entry at a 78.6. Okay, these are for the low risk. Now, why I have one for low risk and one for high risk? High risk is because you don't want to wait too long for price to go all the way up. You just want to take a shot here and play all the way down. Okay, to the take profit. The 4 hour, this will be the take profit. Just send this back. You can see price is moving now. All right, and then the stop loss will be above, just slightly above this 100% here. Okay, so let me just tidy it nicely. And I'll round it to say maybe 64,800. Right, slightly above. Okay, so two types of entry. For the low risk, you just have to wait for price to come up to the trend line and the 78.6 before you go for a short down to the 4 hour. That's one. The second one, if you are high risk, you'll be looking to short soon and you just play all the way down to the 4 hour support. Your stop loss is over here, slightly above the 100%. Reason being, if price breaks above the stop loss, breaks above the trend line and closes above the stop loss area, you know for sure that you can go bullish, right? Your bearish idea is invalid. Your short-term bearish idea is invalidated. Okay, so this is the trade of the day that we have. If price were to really, like what we discussed, break below the 4-hour support, wait for a pullback, we can go for another short all the way to the daily support. But for now, this is what I see, and this is the best bet. All right, and this gives a very nice risk reward as well. So thanks everyone for tuning in to today's trade of the day. Wish you all the best and have a great week ahead. Thank you.